show me the big board, please. Show me all where the market is. I think especially the NASDAQ way down as 10-year Treasury yields go up. Let's bring in Lou Basenese, who joins us, our market watcher, this Friday morning. Do we need to abandon these meme trades? I know that's what you've written. What meme stocks are you talking about, and why abandon them?
Look, I think anyone that has a business model that's defunct, right? I mean, if you look at AMC and GameStop, these are companies that fundamentally were never strong, that didn't have a way to coexist in the market that we live in today, but caught a rising tide, right? And so I think we're in a market that it's going to be much harder to make money in. I mean, you're pointing out to the Treasury yield. Every time it ticks up, the NASDAQ ticks down, and that's just the reality we live in. Indexing and just buying anything and waiting for it to go up is not an investment strategy. I think people are learning that the hard way. You know, you have a little luck when you're an investor starting out. You think it's easy, and then the markets turn on you, and you get the threat of inflation, runaway inflation. I'm sorry. Yeah. You get the threat of a recession. Those are all things you got to factor into your model now.
I get the impression that meme stocks, to some degree, cryptos, they're gambling chips. The fundamentals don't make it for me. They're gambling chips, and I don't want to be a part of them. Is that part of your outlook?
No, I would agree with you. They're pure speculations, but the people that were investing in them didn't treat it as such, right? So we know that real businesses have real value. If they continue to produce earnings over time, quarter after quarter, the stock price is going to follow. It's a very straightforward concept that works out and has played out for decades in the market. But we have a lot of speculators that came in because of COVID, and that's okay. It's brought a whole new class of investors into the market, which I think is hugely important. If you look at all the retail participation in the stock market now, 20 to 30% of trading volume, that's a big win. The smart money thinks we're just the dumb money, and that's not the case anymore. We're learning. So I think it's great to have that community that's into the markets. Now it's time to get an education on what happens when markets turn.
Time to get an education. Very good. All right, Lou Basenese, thanks for joining us. We appreciate it. We'll see you again soon. Gotcha.
Thanks, Stuart.